Surface is a bit quiet. That's pretty much it. We have Amit Jeswani who is joining us now. He's founder and chief investment officer at Stallion Asset. Amit, welcome back on the program. Thank you very much for your time. Prashant this side. Before we go into sort of your view on the market, etc., with the budget around the corner, I want to just attack one sector. This is data centers. A lot of excitement around it, and people are thinking about what is the best way to get exposure. So last week, there was Castrol, which saw a very large move. And we were thinking about whether, it's higher lubricant sales. And someone said, well, it's data centers. Because, these data centers need coolant. And BP, Castrol's parent, makes coolants. And they're going to sort of get that product here, etc. We're trying to reach the management of Castrol. We'll have them and we'll put these questions to them. But fair bit of excitement. I saw a report around this. I remember you telling us that you have exposure to one company in that space called Netweb Technologies. So if you want to just talk us through how your thoughts on this opportunity have evolved and what do you make of it and whether you found other ways to play this.
Good afternoon, Prashant. Thank you so much for having me on your show. So whatever I speak about, these are not stock ideas. These are just for education purposes. I'm a PM, like Stallion Asset. Is a PMS company. We keep buying, selling stocks all the time. We keep trading in, trading out. We do a lot of up and down. So these are not recommendations at all. But coming to your point, Prashant, yes, we do have exposure towards data center. But see, Prashant, the thing is that stocks have moved up 50-70% in a quarter. So you might want to just, so this is a theme which is getting hot by every passing day. If you see, this happened because of NVIDIA. So whenever there's a global trend and stocks in the global market, like today, the largest company in the world is probably Microsoft or NVIDIA. They just keep going up and down. But there is a large bet that investors have made towards AI, data centers, and anything which requires a lot of calculations. And there are ways to play it. And there is Anand Raj, who's building these data centers. There is Netweb, who's a software plus hardware provider. And then there are newer themes like Castrol that you said that are coming. So investors, so nobody knows what these businesses will look like a few years from today. People typically in these high growth businesses, you take things six months, you take a view of every 5-6 months. And then you think that what the next 6 months or 8 months, you cannot have a 10-year view in these kind of stocks because nobody knows. There cannot be a 10-year-old AI company because AI was not there 10 years ago. So these will be new company in all these spaces. They will have explosive growth. And till the time they have explosive growth, typically the markets will keep bidding them higher. But yes, you have to just control your weights because the valuations are extremely high. So make sure that you're controlling your weights. Like if your weight is 3% and the stock has run up 50%, you may want to cut it down again to 3%. This is what we do. I'm just telling you what we at Stallion do for how we play hyperscalers because the growth is just too high in these kind of companies.
I remember, Amit, you're telling us that you generally take your large positions during the earnings season to spot those companies where you are seeing explosive growth. But tell us, this to the data center question, you own Anantraj and Netweb in your portfolio as the companies with exposure.
We don't have Anantraj in our portfolio.
Okay. Got it. So just now going back to that point, right? Earnings season is when you assess companies where you are seeing growth momentum and what the companies have to say in the conference call. So in Q4, which were the companies where you've taken positions in stocks? Do you want to tell us a little bit about that?
So I had already told this, and these stocks would have already run up 50%. So we are taking old, I'm telling you, these are now 1 quarter old. 1 quarter looks like a long time these days because stocks melt up. So we taken position in that one data center play. We had taken one mobile monopoly, like manufacturing monopoly, which is getting created. Sorry, today I'm not taking stock names because my compliance team has not allowed me to take today's stock names. So one mobile manufacturing, we had taken one AC manufacturing company. That has also gone up 50%. So it's been a super quarter for us, to be honest. There is nothing to complain. The AC manufacturing company, the summer kept getting better, and AC manufacturing, just let's wait for the earnings season. There are conference calls where large cap companies like like the Pepsi maker of India, has said that they are running at full capacity utilization. The summer has been a rocking summer, but overall, if you ask me, Reema ji, the earning updates which have come till now in Q4, they've been of Q1, they've been horrible. Nothing short of horrible. I have not seen HDFC negative growth of advances, Titan doing 8%, 9%. I'm just telling you data. This is not opinions. I'm just telling you facts. But Titan doing 8% growth. It is it's a very, it looks like a very poor start to update season. This is not earning season, but update season is extremely poor as of now, and I'm getting scared. And this is probably the reason why automatically, so we at Stallion, we are mostly 100% invested, but we might have come to near 10% cash holdings. And it has happened automatically. For us, cash is not a position, it's an outcome. If we are not getting newer ideas and our old ideas, we are not getting the same risk reward that we need, we automatically increase our cash positions. And as of today, we have cash positions of around 10% in the fund. And this is high for us.
All right, Amit, since you briefly mentioned about the quarterly updates coming in from Titan as well as HDFC Bank, well, let's get in Mangalam. He'll just give us a quick read-through on how Titan did. I think we have okay, we'll go to him in just a bit. Amit, the last time you joined us, you had mentioned a couple of sectors where you had a good amount of exposure. One was, I think, the capital markets place, which, if I remember correctly, it's around 10% of your total mix. Now, the street believes there are restrictions coming and there are some moves in that direction. Are you trimming your positions over there? That's the first part. And Polycab, I don't know how we could term it, the largest cable and wires player, so your compliance team is fairly comfortable. You all had 9.5 to 10% out there. The promoter entity came and sold a little bit. So on both these two, have you skimmed down on the positions?
On wires and cables, yes, we've trimmed our position size. So we got a decent, we sold it at better prices than what the promoters did. So, but we've trimmed, we still have a large position. We still have a decent size position, which is there. See, in building materials, the numbers which have come out till now, the largest structural steel player has grown at 9%. In the AGM of the largest plastic molding manufacturing company in the country, has said that they have said in the AGM that they've grown at 21% this quarter. So growth is going to be a very scarce element this quarter. I can tell you, Nigel, we keep finding growth. We are all day, we just keep thinking that what is that, and export data. We look at everything which is there, but we are not finding very many free hits or full tosses that because we have so much data. We have access to export data, website views. We just track everything which is possible. And I can tell you that even the largest beauty player which came with numbers yesterday, they just did a large investor large investor conference a few weeks before today. The numbers were like 22% growth is for us extremely weak, because 22 is not to our standards. So we're finding it tougher to get high growth of 30-35%. The summer players will do very well this quarter. Capital market, to your second question, we have the largest commodity exchange in the country, and we have one wealth management player. If you look at the largest, sorry, I'm not taking names, but the largest wealth management player, that is at 45p. The middle one is at 80p, and the player that we hold is at 25p multiple. And it's an MNC, the one that we hold. So hopefully we will get better multiples. We are just praying, to be honest, right now. But stocks have not made my capital market stocks. See, one way of me assessing that I'm wrong or right is both the capital market stocks that I have have not making new highs after Modi ji has come in. So both of them are lacking the market after 4 June. If you look at a stock exchange company, which is listed, the only stock exchange, that has fallen 30%. So on the 23rd of July, when the budget comes and something is not horribly wrong in the budget, then there will be light. But wealth management companies will not get impacted regardless. It's only on option trading.
Yeah.
And that too, that 1 hour weekly option, which the commodity company doesn't do any which ways. And the most important part is that public data of exchanges, which is there, shows that there is a 60-65% growth which can happen in revenues of the largest commodity exchange this quarter. So 60-65% revenue. It's very tough to get growth. So that is why we are not selling the largest commodity exchange company that we have.
Okay, MCX. And you held Novama, I remember, Amit. Is that what you were talking about?
Yeah, we have that in our portfolio, but that has grown 51% last quarter also. And this quarter, if you compare Novama to all the peers, the valuations are half of the other players in the market.
You said there's an MNC wealth management player in your portfolio, or did we get that wrong?
Novama is owned by PAG. So
so you
PAG.
Okay, all right. Got it.
So it's not owned by Indian promoters anymore. Indian promoters, there's a rumor in the market that they might exit. So I don't know the rumors.
Okay. Okay. Now, what about Angel, which you owned? Do you still own it?
No, we sold 2 quarters back. I told you.
Okay, that's your yeah.
We cannot take such large drawdowns, Prashant. Our ability to take drawdowns is we are like very poor with our drawdowns management, but we sold Angel out of our portfolio, I think 1-2 quarters ago. When, But
so if you're not finding, you're saying, you are tracking everything and you're finding it hard, right, to find ideas now. I mean, that's a challenge, right? So how does one deal with it? I mean, because money is coming in. So what do you do?
Liquidity तुझे गिरने नहीं देगी, earning तुझे बढ़ने नहीं देगी. That is the state of market right now. Because we are also getting decent liquidity. But I need alpha. See, my alpha expectations is not like most people dream of 2, 3, 4% alphas. At least we dream very large of our alpha. So when I say I'm not getting full tosses, that means I might still get 20-25% CAGR opportunities, and I might say that no, I want more, because see, we are going through a hyper greed stage, and my greeds have also changed. Right now, if someone tells me 20% a year, my analyst comes and pitches me a 25% returns, I may not like it as much because my habits have not been like the 20-25% CAGR for last 1-2 years. So that is probably the reason why I'm like, it can be and this will be for all fund managers, not just me, that our return expectations have now moved to 50% in 1 year. Like I'm just telling you, and this is only bull market euphoria, I'm telling you, which is there in my mind also, that you want higher return expectations. And if the market stops giving us return, our return expectations will also come down, and we'll be happy again with 20% CAGR. But right now, the stage of the markets that we are in, you want full tosses. And what I'm saying is we are not getting full tosses. When I say full tosses, means you're getting 50, 70, 80%. See, in bull market, you have to change your net worth. And if bull markets, your alphas are 2% or 1% or 3%, then you will very tough for you to get rich. But you also need downside protection. So you want highest returns, but also the lowest kind of risk. But if you don't change your net worth in bull markets, and these seasons don't come. See, if you look at all great investors, they have made all their fortunes in bull market. It's only one bull market that changes your entire lifestyle. What Warren Buffett said, you have to get rich only once. So that is what bull market does. And we are also trying to be greedy, but also have like risk at the back of our head. But right now, I want higher CAGR returns, which we'll do as good as market if we don't get this like new alphas this quarter. But the whole idea is in this earnings season, that is where we do the largest churn, right? And that is where we get liquidity also. So let's see if this earnings season goes well. I'll be back to 10% alpha quarter.
As they say, market ने हम सबकी आदतें बिगाड़ दी हैं, right? But when your analyst next time comes and pitches a 25 CAGR idea, please send him to us. if you didn't take him or her up on the idea, but good conversation as always, Amit, and I think makes sense, to think about it slightly, in a philosophical way as well. That in boom periods, and we certainly are in a boom period, you got to think slightly bigger. But of course, also, in a risk-adjusted way as well. So you don't want to really blow up if things start to go sour, which at this stage doesn't look like that is the case. Thank you very much, Amit, for joining us with that perspective. Well, let's focus